But joining us now is Aneesha Sherman of Bernstein. She has a buy rating on the stock. Aneesha, it's great to have you here, and let's start right there. Do you buy Tapestry here, and if so, why?
Yeah, so I was surprised at the magnitude of the reaction. Look, the stock was priced for perfection. It had been up 74% year to date up to that point, and the guidance was a little bit low. So I did expect a bit of a pullback, but the magnitude of the pullback was surprising because the reason the guidance was low was a non-fundamental reason. It was because of the de minimis tariff exemption ending 2 years earlier than expected. And Tapestry takes advantage of this de minimis exemption to ship in goods that are less than $800 in value with essentially zero tariff. And now that tariff is coming back at a full, weighted average of 30%. And that drove a 20-cent dip in EPS. So it's really a non-fundamental reason. Of course, it hurts this year's earnings, but the momentum in the brands is very strong. Coach grew double digits for the third quarter in a row. There's been no deceleration in consumer demand. And so I think overall, this is still a fundamental grower.
Okay. Is this the thing to watch when we start seeing more retail earnings next week, margins and tariff impact on those?
So this particular thing, I think, is an isolated one because it's about the de minimis exemption. Sure, the tariff impact is going to go up because since the last round of earnings, we've had a new round of tariffs, which are a little bit higher. So we are going to expect some additional tariff headwinds reported by companies. But equally, they've also been heavily engaged in mitigation efforts. So we've heard from the big box retailers, they've been going very aggressively to their suppliers. The off-pricers have been trying to pick and choose between vendors. Brands have been trying to mitigate by shifting supply mix and by many of them taking pricing. So there's been a number of efforts rolled out, which we hadn't seen the impact of yet, but we're starting to see now.
So what do you buy ahead of the prints next week?
I think anything where there is either no deceleration in demand. So something like Coach is a great example where consumer is extremely strong, demand is still very high, and they have pricing power. So if you have pricing power and you're able to offset a lot of the weakness, that's where I would buy. I think where the dangers are, and I heard you talking earlier in your program about some of the restaurant names and some of the trade down, where the danger zone is where there is not a ton of differentiation and the consumer can very easily pull back and trade down. That's where I think the weakness is. So in the middle, those retailers that are undifferentiated at risk the loss of market share from a trade down.
You still like TJX? You also like Ross Stores here?
So I don't like Ross fundamentally. I think it's a very good stock. I don't think it's very underappreciated. But I do think into the print, I think the print could be a positive move for them because they pulled their FY guidance last quarter, citing uncertainty. And I think there's a good chance they reinstate that guide that will drive a little bit more confidence. They got a new CEO who needs to build credibility in the market. So I think that will be a nice positive surprise from them. So I would be buying into the print short term, but longer term, I think TJX is a rock solid name. They are immune to any kind of big market reaction because they trade so broadly and they're able to take advantage of trade down as well as tap into the higher income consumer. Okay. And they have really good management quality as well. So I would like that one better longer term.
All right, we got about 40 seconds left. Longer term, you like some athletic apparel names?
Yes. Yeah, so long term, I like Nike. I think Nike is coming out of its slump. It's been beaten down the last 2 years. Estimates have come considerably down. The multiple it looks expensive because the estimates are so low. But as they keep posting more and more positive directionally results, I think that's going to drive a lot of upswing over the next kind of year or so. So I think over the longer term, maybe not into the quarter, but longer term, that's the one I like.